What is up, world? It's your boy Tanh, and you are listening to the Wonton Wealth Podcast. Here, I'm going to unravel anything and everything commercial real estate related. And more importantly, we're going to add abundant value. So if you're ready, buckle up your eardrums. Well, we're just here to bullshit today, brother.
All right.
Talk a little bit about tech, talk a little bit about real estate, obviously about you, maybe a little bit about your book, because I haven't fucking read it.
It's all right. I haven't read your book either, so we're good.
Well, for the fucking audience, Kyle fucking Stevie, why don't you tell us who you are?
I'm Kyle fucking Stevie. I'm a freight broker. I am a startup investment guy, which I would never ask for my advice because I haven't been hitting it too hot yet. And then I am a real estate investor. I tend to pick the most illiquid things I could possibly invest in, and I dive nuts deep into them.
So what Kyle's trying to say is not be like Kyle.
Oh, please God, don't. I'm the minesweeper. I just step on every landmine so the people don't have to follow my path.
Well, this is kind of cool, brother, because we haven't caught up too much aside from the last little birthday party. But let's start with the tech startup stuff. What's going
Hmm.
on there? I don't think I've heard anything about all that.
Well, I invested in a Bitcoin mining facility in Rockmart. That was they were a mining pool, and they were leasing space from this place called Windstone. And then Windstone had like three different owners within a matter of 7 months. So basically what happened was the city of Rockmart, Texas had Alcoa aluminum plant there forever. And the city was really, really wealthy while Alcoa was operating, but then they left. So for like a decade, there was nothing there. But they did have their own little power grid, which was not part of ERCOT. And it was the perfect location to set, outside of the fact it's hot as hell in Texas, it was the perfect place to set up like these mining facilities. So they went in and they built this Windstone company went in and built like I want to say there's like 20 of these giant prefab metal buildings. I want to say they're like 6 racks high. And the buildings themselves were probably right. They weren't shorter than 50 yards long. And there was like eight. There was just they're all over the place. Like our group had four of them. We were getting energy at point one, like 1.7 cents a kilowatt hour.
Holy shit.
Which at the time, the average for the United States to mine Bitcoin was like 6 cents a kilowatt hour, or something like that. So the competitive advantage was enormous, and they had this arbitrage opportunity where all the energies that went through the miners could be sold back into ERCOT, so that you were selling. They were actually selling electricity to Delta. I mean, to Texas's grid. It was supposed to be like this amazing investment, and I don't know what happened, but I know the guys that ran the place got sued like 5,000 times, and they got kicked. They got Riot Blockchain bought the place, locked them out because there was a big discrepancy over the energy futures and stuff that they were supposed to be paid. They weren't paying contracts because they felt like they were supposed to be paid. They set up subsidiary LLCs off of these different. It was like a collection of like four LLCs. So like every time they would raise capital, they would create a new LLC, and eventually they were going to roll it into Rhodium is what it was called. And then they've created subsidiaries to those LLCs. So it was like this real convoluted network of companies that I guess they would have been all right if they would have just stayed at one location, but they decided to open up a facility in Tyler, Texas. And they took a bunch of money from these guys that run family offices. And that's where the ball unraveled for them because those guys were not having any of it. There was a group of doctors. The guy that brought a bunch of doctors in, like he was a bulldog. So they actually forced those guys into foreclosure and bankruptcy. So we went from having a return of was supposed to be 1x every year because at the time to break even, I think Bitcoin had to hit like $8,000 for us to break even. It's like we should be rolling in money right now.
Yeah.
This is the story of my life. This is just the way it works. The other one was a little bit too early for its own good, which was a real estate blockchain company. They were going to do uh, transactions with Chinese and foreign investors to buy rental property in the United States and abroad. and they were going to do like it was kind of like they were going to handle the whole process. They had a expanded checklist for inspectors to hit, to go over. It wasn't just going to be what was required in each state. And they were going to have like smart contracts that basically held the escrow, and it wouldn't be released until a bunch of if then statements were completed. So like if the inspector inspects, then this person has to respond, blah blah blah. They had a memorandum of understanding with UI, which was like a big Zillow company for China. And like 4 months later, G was like, "Yeah, all foreign investment, we're bringing the money back to China." Sports teams and everything had all this Chinese nationals that had like European soccer teams, and they had to sell. It was nasty. And then the one I'm in right now, I think is going to be good. It's just the last. I mean, I don't want to be political or anything like this, but the Biden administration, when it comes to blockchain and anything that's good for the United States, sucked. It just did. It was like if it wasn't good for the global economy, then they didn't care. It was like Elizabeth Warren is, in my opinion, is one of the worst human beings alive. So if you ever get a chance, read article called Operation Choke Point 2.0, and you see how dirty she is when it comes to her banking buddies. And they basically almost stifled the whole innovation cycle of blockchain based companies, even if they had nothing to do with cryptocurrency. They're like, yeah, no banks are allowed to bank these guys. At first, they were like, well, if you're going to bank them, then your FDIC insurance is increased. What you're required to hold in reserve is increased compared to your competitors. So that's less money that you can go out and borrow on or loan or whatever. And then eventually it got to the point where they're like, yeah, if you 10% of your if you're, it's like, I'm just making numbers up. It's like 10% of your clientele is involved in crypto companies. Yeah, it's just a freaking nightmare. It's so they almost bankrupt the entire economy because that's when Silicon Valley Bank went bankrupt and a couple other ones because they couldn't hold the funds that were required to be held, and they couldn't bank these guys anymore. They weren't allowed to, so they lost a big part of their client base. It was like it was just so dirty. But now Conduit networks, I think it's going to hit pretty big for my purposes. But it's like they're creating a decentralized cloud. So they're doing the whole ecosystem. Like they have the hardware they have that will create nodes and like mesh points throughout the kind of like Helium. Is that how they're doing? Are you familiar with them?
I am familiar
Or
with Helium. I have two
is yeah,
nodes or two miners.
there you go. Yeah, it's similar to that. It's similar to that with more. It'll have more applications. They're invested in They're about well, the one company that I invested in that merged with everybody to become Conduit. They're 9.9% um, equity holder in a special depository institutional whatever bank in Wyoming. There's only four of them. They're not allowed to take investments or anything. They just hold title for assets that are going to be tokenized, so that it stays compliant with the requirements of what the SEC requires now for normal securities and investment. Somebody's got to hold title to it, so nobody's messing with it. So you can always have your chain of custody.
So I
It's nerd stuff,
briefly,
bro.
I love it. I love it. It sounds like you fucking did a lot of research on this shit. But my question is I feel like Conduit. I briefly read that white paper, by the way, and that was actually pretty well written. But a lot
Yeah,
of it obviously went over my head.
Hiles. Yeah, Hiles is a badass, but he speaks in Hiles language. It's taken me like 6 years to be able to like have a conversation with him where I can understand about 40% of it. He's just too smart, man. He's just so intelligent that I gotta take into account what he said, hit him back up like a text or an email, and then ruminate on it for a while. I'm like, all right, now I get it. Okay. Now if I can explain, I base everything off like, can I explain it to my mom? Because if I can't explain this to my mom, then nobody's gonna give a shit about it. That's the way I see it anyway.
He's the mastermind behind 10x TS, right?
Yeah.
How's 10x TS going? Or did they merge or whatever?
They they merged in the Conduit.
Okay, okay.
So it was like 13 different companies merged together. They're all doing different parts. They're all doing different things individually, and then we're like, you know what? We can create our own ecosystem now that'll support all aspects of a decentralized cloud.
So, in essence, Conduit is a blockchain that is going to help with real estate transactions. Yes?
Real estate transactions will ride on it. Yeah, it's going to be across all asset classes and basically anything that needs secure record keeping. So it's not just going to be about trading and um, it's not going to be about getting on the secondary markets. If you're like have a private company that wants to get some cash for some of its equity without having to file with the SEC to do like an IPO. But it's also anything else that has records required, or like anything that has rights attached to it. So mineral rights, water rights,
So,
carbon credits,
essentially,
anything like that. Yeah.
a lot of it has to do with regulatory compliance, right? Because you mentioned SEC a
Yes.
couple times.
Yes.
Now, let's look at a real estate transaction.
Okay. Let's do it.
Let's say, Kyle, you're selling me one of your fucking buildings. I want to buy it. Do the documents that I take from you or you provide to me during due diligence and purchase contract, all that shit, will that live on the blockchain?
Yeah, but it won't be recognized. Title is still going to have to go to the county seat, the county office. Right now, I mean, none of the local county registers are tokenized yet. So basically, here's the transition that's happening right now. As is, then there are properties that are tokenized. But basically, what's that's done is just take like, you guys do a syndication and you have a GP percentage, you have limited partners, and you have all those things that have to go along with it, like whether you give them voter rights and distribution and K1s and all that other shit that goes along with running their property, and then the investors want to have their distributions and stuff. And basically, what the tokenization allows them to do currently, because there really isn't a market to trade, is it allows operators to take a lot of the backroom stuff and make it much more efficient. So you can use a smart contract to basically govern your whole backroom operation. So you say on February 12th every year, K1s get distributed to these wallets. Okay. What it was eventually going to look like is that you're going to have like there's a company right now that's lending on future rents. So rights, it's the right to it's a part of owning real estate comes with a series of rights, like right to possess, right to like riparian rights, the mineral rights, the air rights, the shit above your building, all these different rights. Eventually, you're gonna be able to tokenize all of it. Right now, it's just too complicated. So the only thing is basically is being tokenized is what we would do anyway with the syndication, where you got $100,000, you get that gives you X amount of equity in the limited partnership, your pro rata percentage, and it's tokenized now. And if on a broker dealer's website, say like Securitize or something, and you can only trade, you can list it on Securitize if you need to get your money back, but that's the only place for a marketplace. So that's what it would look like for you and I right now. Is what we would do is we would find a broker dealer to do the tokenization with, so that the legal representation is there. We're following the proper channels that the SEC requires, and then you'll have an actual secondary marketplace to sell your shares if you choose to sell. It's just a digital representation of what you have in the real world. Does that make sense?
Yeah, 100%.
Yep. Kind of like a private REIT or a public REIT instead of have, but you don't have to do all the headache of all the regulatory requirements that come along with a public REIT.
Because Conduit will pretty much take care of all that, yes?
Well, Conduit won't have anything to do with it besides being the host. And Conduit won't isn't it isn't a broker dealer, so they won't have the ATS. It'll be someone else. They'll just do the record keeping. So yes, in a way, it'll be because of Conduit. Because if you use Conduit to token network to tokenize your offering, which is perfectly fine, then they'll be in the back room recording all the transfers of interests. They'll do your KYC as well. They'll do your KYC AML. They make sure that all your not pro forma. What's the big ass this?
PPM, private placement
Yeah.
memorandum.
Yes. So like they would be able to possess that. And then the bank, the special depository institution would have like would take title to the bank. The bank would hold the title, and it's going to have you'll have the transfer agent, which makes it safer than cryptocurrency, because when people think of digitized stuff, they think of like tokens, like Bitcoin, or utility tokens or Ethereum or something like that. And then there's always that, well, that guy lost $4 billion and it's sitting in one of these landfills in Europe and in England, and paying all these people to dig through these landfills. This is going to be regulated just like any other 506c or Reg D or whatever offering. And so you have a transfer agent involved. And so the transfer agent, you say, shit, I lost my keys. Then the transfer agent burns the tokens that you have, and they give you new tokens. You're not going to, it's not a cryptocurrency. It's just a digital representation of a security interest. Does that make sense?
Yep, yep, yep.
And so conduit would be the person that would be the entity that would help record all that, make sure that when a trade happens, when a trade happens on an ATS, that I don't sell my shares and then I duplicate my tokens. And even though you think you have you bought $50,000 worth of interest in this property from me, I duplicate and then I make it so that I actually still have the $50,000, and I'm going to record it faster than you do. They're going to make sure that there's no like the chain of custody for all the tokens that will represent the interest will be there. And since it's on a blockchain, every transaction is sequential. For those who are familiar with blockchain, all the transactions are sequential. So you will be able to trace it from origination till properties disposed of. You burn your tokens, everybody gets paid out what they would get paid out in a traditional syndication or uh, fund, or a close of a fund or whatever.
So Conduit is the backbone of this. If they're facilitating the transaction or the paperwork, the filing, the cloud system, etc., what or how are they actually getting paid? Are they getting paid in tokens and then switching that to another token? What is that? How does that look?
Well, the conduit token eventually is just going to be a utility token. It's going to be a settlement token within the network. They'll get paid in fees, transaction fees, and hosting fees, and things like that. So they'd be lying to you if I told you whether they were getting paid in Ethereum or whether they're getting paid in fiat, or how that would go about. I don't know that.
What's
I'm under the impression that whoever's tokenizing on there is going to pay them in cash, because that's what they're going to want, but I don't know that.
is Conduit on its own blockchain or is it layered on top of another system like Ethereum or Solana?
No, it's its own network.
Okay, gotcha.
It's its own network. You can do like a ERC20 token, and they can operate. You can operate that on their network, because they wanted to stay agnostic in regards to which chain people use. I mean, Ethereum is like by far the largest app. The largest chain for app development. But Solana, Polygon, there are other ones that are people are going to want to. Who knows what's going to what happen with XRP, with bank settlements and stuff, once their legal battles get settled. That so they wanted to be able to operate within, or if Bitcoin actually gets lightning up and transactions can happen quicker than they're happening right now, so that they can actually do settlements, you know, hundred thousands of settlements a second, as opposed to what it is right now. Well, it's just so early in the game, and I'm doing a
I
terrible job explaining it, because this is I only have like a 64,000 foot view. Some of these
with you,
guys,
brother.
some of these guys you talk to, and they just nerd the fuck out. You're like, all right, I don't code. I don't understand any of this. We need to slow this down.
Yeah, sometimes I have to ask ChatGPT to explain it to me like I'm fucking 6 years old. Because, like you said, a lot of this technical shit, what's going on behind the computer, I have no fucking idea, man. All I see is a screen and a keyboard.
Yeah, I started listening to Wolf of Wall Street's podcast. And that is like when I equated it to like studying for law school. I would read the same page 10 times in constitutional law. Like I just didn't, it wasn't going into my brain the right way. And that's kind of how the Wolf of Wall Street is with, 'cause that's based basically just on alternative markets, predominantly Bitcoin and cryptocurrency. But yeah, there's just makes you appreciate some of the smart people out there. Because I feel like I'm pretty intelligent. And they, it's just like listening to me like, God damn, you guys are good. So
It's their
smart.
world, brother. It's their world. Like for me, like when I read a lease and when we're going under due diligence for a commercial real estate property or just any fucking legal document in general, it literally takes me at least 30 minutes to read like two paragraphs.
Yeah.
Like,
That's a major part of the reason why I didn't go into law after I graduated law school. It's like, God, can you imagine reading these documents all day long, just hoping you find the one line that you can exploit in this 500-page document of just dry boilerplate language?
yeah, man, not
Takes
not
a
for me.
special, yeah, it takes a special kind of like autism to be able to do that. Like I just can't. I don't have that ability to focus. Like you have to be like, I don't think that Asperger's is officially considered a thing anymore. I don't know, but it's gotta be like that type of person that's just like can hyper focus on things like that and just find it.
Kudos to them because that's definitely not me.
Yeah, absolutely.
So you can't really read legal shit, but you can write a book. So tell us about this digital melting.
I can read legal shit. I prefer not to read legal shit.
Then
I
I'm with
can
you.
do it. A digital melting. I'm making illiquid real estate assets liquid through tokenization. Sorry,
So
Stosh. I screwed that up on his podcast. Bad. Can you imagine being invited to do a podcast and then forgetting the name of your own book in the middle of it? Because I did that. That was hilarious.
that's too
Hilarious.
funny.
I
That is
feel so
too
bad. I
funny.
wasted so much of his time.
At least you got it now.
Yeah, I just did it. I had to get it out first, so I did it quickly.
So how
All right,
long did
so
it
that
take you to write the book?
probably about 2 years.
Holy shit.
Well, there wasn't much to write. There wasn't much to look up at the time. Like Red Swan was doing some stuff. The biggest project still, I think, at least in terms of name recognition, is what happened with the St. Regis in Aspen, Colorado.
I haven't heard of that one.
So what they did was they took shit. This is 2019, I think, 2020. I can't remember. I wrote about the book that you would have known had you read it, but you didn't. So they uh, so they took 19% of they're doing renovations. So they need to raise money for renovations. So they set aside 19% of the equity of the hotel and they tokenize it. And then they list it, and it's been through three different broker dealers, alternate ATS sites. So I think Securitize has it now. I'm not sure. They did have it, but it doesn't matter. Either way. So what happened was they raised the capital through and then people received tokens or, digital representation of their equity percentage. And they were given a place to trade it. And if you went on the website, if you went onto Securitize and looked at it, it looked like a normal ticker. You see the candles and the wicks and all that other crap, and it looks exactly like that. It moves so slow. There just wasn't much, and that's the problem with it now is there's just not much liquidity and there's not much market participation. So it's not really gaining as much traction as it like logically should. But I feel like this is something that's going to be adopted slowly and then all at once because it's still predicted that depends on who you look at, but it's because there's a huge gap in these valuations. But between 5 trillion and 16 trillion dollars worth of assets are going to be tokenized by 2030. Right now, it's 233 billion dollars tokenized. So you look at that and you're like, holy shit, that's 25x on the low end worth of assets. And you're talking like privately held companies, artwork, anything that's held as a basically a well, not basically as a private asset that has value that's being trapped, you'll be able to list it, but with in a secondary market, and people are gonna be able to make really cool baskets of investments. Like you're gonna be able to invest in a racehorse without having to know anybody and at the same time invest in a piece of artwork because if you want a hard asset and then invest in a company that's not that's like a mid-sized company that's privately held, and then you'll be able to invest in real estate, and you'll be able to diversify yourself. The people the more I've been thinking about this, the people that are going to make the most out of this, I think, are the ones that can judge teams and know how to know how to evaluate mid-level to small companies, because there's going to be so many opportunities. There's going to be like a paralysis by analysis for people like me and you. That we're going to go in there and our eyes are going to go cross. We're like, the fuck are we looking at? You need smart, like this the
Yeah.
smart financial advisors that aren't just like cookie cutters, but guys that actually go in. The guys that write for like Seeking Alpha, those kind of guys that really
Yeah.
can analyze a company. They're gonna be worth their weight in gold, and they'll be able to do it a lot easier with AI. Like just put Gemini or Chat GPT. Like, all right, give me the pros and cons on this company.
Right.
Because I did it for Conduit. I said, give me the pros and cons for this company. And like within 15 seconds, I had a whole like investor SWOT analysis that would have taken me forever in college. It's it's exciting, I think.
Fuck yeah, it is. So obviously the adoption right now is super slow, right? For whatever reason, maybe people aren't seeing the benefit of it, whatever. Maybe it's fucking political reasons.
Well, it's political reasons in regards to not being like a mega for life or never Trump, not like that. It's just the regulatory sludge, whatever the word is, that we were just in for the last 4 years. We have a lot of catching up to do because companies were trying to reach out to the SEC and say, hey, this is what we're trying to do. Will this be okay? And they wouldn't get any guidance, or they would get like obscure guidance, and they would go and they would release their token thinking that they were following the proper protocol, and then all of a sudden they would get a cease and desist letter, and then all of a sudden your company's in deep shit. Now you've actually spent all this money on tech that you can't use. So that made people very cautious. And so now is why people are starting to say, I've heard it from a bunch of people. So like slowly at first, but then all at once is not obviously not my line, but I've heard that like a bunch of times through different podcasts. Like it's starting slowly because um, BlackRock has tokenized, I think, three funds. Two of them are bond funds, but I mean they're doing it, and so BlackRock is not going to. They're not going to let the government say, yeah, but now we got to stop being able to tokenize these different asset classes. It's just a matter of having proper regulatory compliance to be able to have like these different broker dealers to be able to, instead of just listing on their site and keeping it siloed on their ATS, but being able to transition and say, all right, I don't want to use Securitize. I don't like their operating interface or whatever. I prefer to trade on Fidelity's alternative markets. They don't have one, but essentially. And I want, even though it's listed on Securitize, I want to be able to buy it on Fidelity. So that universality, the universal token that can translate between the two of them and can record the transactions of tokens being so bought and sold from one to the other, and making sure that the transfer agent has everything recorded properly so that, like I said, there's no duplication of interest, is going to be like that's the holy grail that people are searching for right now. It's a trustless environment in regards to you can pretty much program in all the agreement. You don't have to rely on a human to do a lot of this shit, which is both, you know, very efficient and very scary at the same time. But it is what it is. That's what the that's that universal token with all the backroom stuff being automated is going to be the key. That and getting people, more and more people involved.
So this might be a dumb question, but I want to lean towards Bitcoin a little bit because obviously it's a decentralized network. And obviously with the SEC, you got securities, offerings, etc. There might not be a way to democratize or decentralize real estate, but I guess my question is there a way, is there a loophole around that, or can it be done to take it out of the SEC as the controlling governing body of securities and just democratizing it out or decentralizing it out?
Well, as of right now, no. Well, Bitcoin was considered not to be a security. That
Right.
Ethereum Bitcoin, to my knowledge, Bitcoin and Ethereum were considered not to be securities. They're not sure if they're commodities. There's like a big pissing match between the CFTC or whatever the hell it is, CTFC, and the SEC about who governs what, who's the regulatory body for the specific things. Trump hired David Sachs to be the, I guess, crypto czar, for lack of a better term. So he's going to set up. They're in the process now of setting up the what will probably be another agency or regulatory body that will handle just cryptocurrency. And it needs to be done because it needs to have guideposts in place to be able to adapt quickly, because technology can't wait for, you know, regulatory bodies to get together and comb through what's changed in the last 4 months. And you got all these nerds that don't know anything about tech. They're just lifelong politicians or bureaucrats, and you can't rely on that. It would just bog down everything. I don't. So the answer to your question is, it's everything's being made right now. So you're gonna be finding out in real time, because I have no idea.
So, as we're speaking now, the Bitcoin conference is going on. I forget where the hell it is, but I did see that JD Vance was there speaking. And I know that the current regulation, I know that they are very pro crypto. And I feel like they are on the edge of essentially building a treasury of Bitcoin reserves. Like, you've seen, I just saw Missouri the other day. They're doing zero capital gains statewide for crypto, stocks,
I
equities,
think
etc.
I think Florida's about to do the same thing. The really interesting thing, and I don't really understand these very well. I understand what they are. I don't understand how they solidify the position of the dollar in the world's economy. But stablecoins are extremely important, and I will not say anything about why, because I can't give a concise answer, and it's going to be meandering. And it's going to be, but basically, stable coins allow you to settle things over an exchange or over the internet or whatever. And a lot of these are running based on a dollar. So like USDC is pegged to the dollar.
Tether.
And yeah, so that allows you to settle internationally without all the international fees that go along with it. And so that I don't know if that's going to replace, like, if that's going to be the upgrade to the petrodollar. It sounds like it is. But that's the space that they've been very aggressive in carving out. I think the Genius Act is what it's called, has something to do with that. But I've been so busy with work, I haven't looked into that at all, and I'm a terrible person to speak about it. But if anybody's interested, look
Look up
at
the Genius Act.
yeah, look at Genius Act and learn about why stable coins are so valued right now in regards to their future role in the economy.
I did see that come through. Like you, I haven't had time to fucking look at it. But and even if I did, I probably wouldn't even know what it's saying.
I
But
know. So you look at these things, you're just like, that doesn't make any sense to me.
with what I'm seeing currently with all this adoption that the US is kind of front running. Once they kind of do that, I feel like that's going to be a massive push for pro crypto. Eventually, maybe not 2030, but maybe a few years after that, slowly, then all suddenly. So once that adoption hits, I feel like it's going to open up a lot of gates for all these other things that we're talking about, kind of like Conduit, kind of like, being able to talk to the fucking SEC and have them actually be cool with all this token exchange that's liquidating real estate assets.
It's the adoption, regulatory adoption is going to speed up very quickly. And I think once companies know what they can operate in, what they can't operate in, you're going to see a lot more productive companies coming out of it, obviously, and you're going to see it wash out a lot of the bullshit companies. Because right now, I mean, most people, all they had was like a white paper and slick marketing, and then they try to create FOMO to raise money for tokens that had no backing on anything, and that they were just going to get put onto an exchange, and like kind of like a meme coin. Just kind of like, I hope to God you're there first and you get your money back, or you can make a profit, because otherwise you're gonna be left, what they say, holding the bag.
Like all those ICOs.
Yeah, man. Like
Is
just
Conduit doing an ICO?
no, no. They're doing mining as they go along. It's kind of like, it's not proof of work, but it's kind of like proof of work. So it's not like Bitcoin where winner takes all. So you mine, you hash, you create the hash, and then you get rewarded, whatever. Conduit is you get rewarded for being part of the network. So 23% of all rewards goes back to the network participants. So even if you don't hash, you're still going to get your at least get your money back for the miner, if to not make money throughout the course of the year. I mean, they're going to pay people. And the cool thing about it is that you can now, it allows people to mine in real estate projects. So you have a real estate project that's tokenized, a couple miners in the basement participating in the network that you're going to be using the tokens for settlement anyway, whether data settlement or actual like money settlement. And now you're getting rewarded for it. So you can actually participate almost for free inside the network outside of paying for the electric and the machine. So you can just hold on to the tokens as long as you want to and use them for settlement later, or you can send them to an exchange and sell them to someone who can use them, or someone who wants to sit on them and try to speculate or whatever. But at least there's like there's an actual organization that's actually providing value to the public with goods and services, as opposed to, some Ukrainian guy that's got the kick-ass idea and a good marketing team, but he's not going to develop anything. He's got a slick website.
That's what it's all about, man. It's like websites.
Oh my God, I went down to San Juan 3 years ago for a cryptocurrency summit down there. And it's just a wild group of people. A lot of those guys they're built different in regards to, it's like falling into a pile of shit and coming out smelling like roses type people. I mean, I talked to some people and you're like, I can't even believe you made it past high school, let alone or worth $20 million because your friend told you to buy these tokens when they were at $10 a piece or whatever. Is yeah, like they're living like lottery winners live. It's like they're like the tech equivalent of like a West Virginia hillbilly that wins $10 million. You're like, dude, this is just all going to be gone in like 5 years.
That sounds about right.
Yeah, but they're having a great time. Their life's a lot less stressful than mine was.
Let them live. So for Conduit, what do you see coming next on the roadmap?
You'd have to talk to the guys that run Conduit to know that. I'm just like a passive investor, so I listen on calls and stuff. I don't know what I'm allowed to say and what I'm not allowed to say in terms of what they're doing. I would say that the hardware is going to come, and once the hardware comes, then the mining will start, and people will be able to list their tokens after. I don't know if I don't know if you do mining, if you have to sit out like an investor would have to sit out, like, there's blue sky laws in different states, and some, depending on the type of offering you have, sometimes you got to sit out like 6 months to a year. You can't sell your stuff. You got to just, but is that way you don't pump and dump. I don't know if that works the same with the miners. I don't think it does, because you're actively participating as by hosting a miner, like you're paying for the electric. You've purchased the hardware. I don't know, but I think that's the next thing, is to get the tokens mined so that they can bring on more clients and have more activity within the actual ecosystem. I think. I don't know.
It's still exciting shit.
I think so. I think it's awesome. I mean, even if it's not them, it's going to be somebody. The idea of a centralized cloud is I think is like the antithesis of what the internet's supposed to be. This internet's supposed to be wide open and open for use and free for all, and it's supposed to have spawned like this new age of enlightenment, and instead it's spawned like porn addicts and gamblers and people who just watch reels all day.
TikToks too, right?
Yeah, but the actual, like, when you start thinking about like critical things for personal freedom and, national security, like having a centralized attack point, no matter how solid their security is, and I mean it's Amazon and Microsoft and Apple, those guys have incredible security, but still they have outages all the time. So when you have When you have a decentralized cloud, you should never have an outage because there's no single attack point.
Right.
Everything's operating throughout the world. And if it's truly a blockchain, like in the theory of what it's supposed to do, if a node is corrupted, that node gets shut out. It's done. It's gone, and you revert back to where you were before that node started trying to screw around with records. So you should never, like I said, you should never have an outage. And it prevents. I mean, I don't know that it ever get to this point, but if you're planning for Armageddon, it prevents the United States from getting in and shutting down your internet. Supposed
Fair.
to. It's
Supposed
supposed
to.
to. I don't know how that works with actual internet providers, but you had like, okay, so here's an example. And a lot of this stuff, it doesn't really seem like it impacts us much because we're, you know, fairly far removed from international strife, and our systems are pretty much secure. We don't have as many shady people in such high positions as a lot of other countries do, or we're not in the middle of a war. Chile has basically sold to China, and China owns a shit ton of its electric, and it owns like this one of its main ports. And so, if I'm remembering this story correctly from a few months ago, President of Chile was like, "Yeah, screw this. We're not doing this anymore. We're not paying this incredibly ridiculous loan back to you at the rate you want us to." And Chinese were like, "Oh, okay." And then that's fine. You can do whatever you want. And then Chile didn't have power for 4 days.
Shit.
So, it's like there's a centralized attack points that come with these huge, these huge governments taking control of utility companies and taking control of, obviously the internet. And in theory, this is a way to provide security to people that they can survive without the risk of their government coming in and eliminating their source of, potentially a source of income for a lot of people doing internet business. But their ability to communicate with the world,
Yeah.
if any of that makes sense.
No, 100%. That's some crazy shit, though. I didn't know they sold their soul like that.
Yeah, well, I mean, it was they talk about the hard power, soft power. And the United States is just like, do what we say, or we're just going to bomb the shit out of you. And then China's like, do what we say, or we're going to call our debts, and you guys owe us like 35% interest. And
It's fucked up.
or we're just going to take all of your natural resources.
Yeah. And now you
Both
can't
of them
eat.
are, but yeah, both of them are pretty dirty. One of them doesn't kill millions of people, but it still could potentially starve millions of people. So it's like, which one's which? There's got to be some sort of happy medium in between there, you would think. But
It's just a lesser of two evils, well, let's talk about real estate for a little bit. What are you doing in real estate right now?
nothing.
Haven't bought a deal?
No, I said we haven't stabilized this building in Covington yet.
Well, yeah, let's hear about that. I want to hear the backstory because and I got a funny story too after you tell yours.
Um, so we bought this building off market from a friend of ours, and uh, we bought it in 2019. He needed to sell it because he was doing an expansion to a building that he owned, and he wanted to take advantage of the opportunity zone credits. They were going to step down from 15% to 10%, and he wanted that 15% basis point, his 15% basis point, so that he could, the 15% off your capital gains from your sale of whatever after 6 years. So he sold the building to us. We closed on our construction loan like 5 months later, 6 months later, and then COVID hit in between those two times. So we had to totally gut a 6-story building with the idea that we were going to put a bar or roof or a restaurant on the roof. So it was eventually going to be added. We're actually adding another floor, and our elevator didn't go to the basement and it didn't go to the roof. And we knew that going in, so we knew we had to do that. We knew we had to put an exit staircase for the roof, the second, because we have one that's pretty steep, but we needed a second one. So we craned that in. That was no big deal. It was just how delayed everything was during COVID, getting the shit you needed to get to a project. And so it delayed us by probably about a year. And then one of our tenants left because they didn't like not having an elevator. They were like middle aged, like late middle aged guys going into their 70s, and they weren't in shape to walk the steps anyway. So I didn't care. They stiffed us out of like 4 months rent, but it was like whatever. Not going to go fight you guys over it because we did make their life a living hell for 2 months. It was so loud in there. So we have a bank in the basement. We now have somebody on the third floor. I forget what they do. I have to ask Joe. We have a data company on the fourth floor, and then a law firm on the fifth and sixth floor. And then we did have a restaurant and bar on the top, and they are no longer there. And
So aside from the rooftop, you're pretty much all occupied, yes, or
well, the
minus one
second
floor.
floor, yeah.
Yeah. What's the space there?
The space, second floor is, I mean, they're kind of around 4,200 square feet. Second floor is kind of shaped weird, so I think it's less than 4,200 square feet. The rooftop's all of 4,200.
Could you sell it now, where it stands?
No,
The
no,
rents don't
Covington.
support it.
What?
The rents don't support it.
Well, the rents don't support it, but we were never buying it to sell in 5 years. We were we were buying this to hold for a long time because we got it at a really good price and we got it at a really good time and it's a really good location. So I don't know how worldwide your podcast is, but for people that aren't familiar with Cincinnati, downtown Cincinnati sucks. It's hard to do things there. It's just the it's just a if you're not 3CDC, you're not getting any opportunities there. It's just a shithole. But right across the river in Covington, they actually want you to be there. So they bring in business and they they recruit groups to come in. And so there was this big IRS site, just huge IRS building that was right on the river that they tore down years ago. And now they're renovating that. They're redoing the street grid so that it actually goes from the river to, I mean, it'll connect Main Strasse, Main Madison, and it'll have single family houses. It'll have multifamily. Chase College of Law and one of UK School of Medicine's Northern Kentucky branch are going there. They'll have other industries come. They'll have other companies coming in. Probably like if you're talking like mid-sized companies, corporate headquarters, things like that, and that will help bring a lot of to the city. A lot of foot traffic will increase. Density of population is going to increase. They're doing other projects to bring in more people, and they're just like aggressively recruiting jobs to get people into Covington. I think I was actually telling Ash this morning. I said I think by 2036 that building will have very little debt on the building, and I bet the cap rates compress down into the four range because
Holy shit.
Because Covington's going to be such a place. So it's just so convenient to everything. It's so convenient to everything, and the city leaders want you there, which makes a big difference.
So I
So
haven't invested in Covington in a while, but those were all resi back in the day. But I've heard mixed reviews from like contractors and guys like doing all those big projects. I heard mixed reviews from them. Like some say they're easy to work with, some say they're tough to work with. But it sounds
we
like on your end,
we actually one thing is we bought our building from like they're like I'm not gonna name names, but there are two big dogs down there that pretty much because they're great guys. They're very smart businessmen. They take care of business. They don't when they get to a project, it's not there's no farting around. The shit gets done. And there's two guys, and they're kind of competing with each other. And we got our building from one of those guys. And the other thing is my cousin, who's the manager of it. He knows everybody in the city, so it helps us. But they also had their run-ins with other properties they owned that were residential, and our building is going to bring in like 200 jobs to the city. And he had two buildings that were dilapidated that they considered historic that he needed to get torn down, and it took forever. It took like almost an act of Congress to get approval to tear these things down. So he's been on both ends of the spectrum there. So I can see where you guys are coming from. I think it depends on the project. I think it depends on what the benefit to the city is for the project. And I think some of it has to do, and I have no idea how these guys approach them. So, or how you react to when you don't hear what it is you want to hear, because there's a specific way you got to talk down there, and it's not aggression doesn't win many friends. Like you can be a no bullshit guy, that's fine. It's the you can't go in aggressively, and I'm not saying
Can't.
the guys did. I'm just saying that's been my observation. There's some places you can go in and you can try to be the big dick and just let it swing around, and it works. I don't think it works down there. There's too many people trying to get in there.
Yeah. So would you say the rooftop bar restaurant that you had in there kind of started too early before kind of all this development is kind of coming in?
No, I just think they're terrible business people. That's what I think it came down to. I think that they bit off more than they could chew getting in there, and then they didn't operate very well, and they they intermingled their funds with their other restaurants, as far as I can tell. And they had three concepts in the city, which was fine. It made sense, I guess. You have a walk up, you have your walk up food truck. You have a casual sit down place, and you have ours, which was like it was like finer cat. It was kind of casual still, but it's finer casual. It
Yeah.
wasn't like you weren't wearing like a tuxedo to go into the place, but you weren't dressed in sweatpants or sweatshorts. Well, you weren't supposed to ever do that ever, but people did anyway, didn't they? Didn't they, buddy?
So when I don't know how you found the operators or whatnot, but I don't know, you posted some it might have been just like a private group chat or whatever, and I was like, "Oh, hell yeah. He's got a tenant or he's got a business open up in his building. This is awesome." And somehow literally within like the next day or something, I was in the area and I was like, "Hell yeah, I'm going to check out my boy's spot." Went up there and mind you guys, I thought that Kyle was like a passive investor or the owner of this restaurant. I knew he owned the building, but I thought he had partaked in the restaurant. So I walked up into this thing like I owned it. I'm in like a cutoff, some shorts.
Yeah,
I'm walking in like, where's Kyle at?
you look like a tech founder, like a tech CEO. Like I don't give a fuck money. So everybody's like, look at this guy.
Literally, everybody was like dressed up for this soft opening, and I was like, and then I walked up to sign this card, like, congratulations, Kyle, and all of a sudden I see somebody else's name. I'm like, holy fuck, I'm in the wrong spot. Fucking hysterical. But outside of that, I mean, did you give them TI or anything?
hmm We'll never see that. We gave him a lot of TI. We'll never see that back. We gave
Damn.
him TI, and we had a deal where we are getting gross receipts from their restaurant at X amount of money. And then once they paid back everything that what they went over all their TI on, we were gonna step it down to like a lower percentage, and just never got to there. It was I don't know. I just there's certain ways you can handle things, and certain ways you don't want to handle things. Like we would have kept our mouth shut. Nobody would have known what happened up there. But they were such shitbags about like leaving and blaming everybody for their misfortune. And it's like, well, I didn't make you not pay the subcontractors. That's why you're getting kicked out now. It's because now they're filing on our building.
Right.
I didn't force you. We asked you to get our name off the lien. We didn't have anything to do with your build out besides using our building. And they didn't, none of it. I mean, they even, dude, I don't know. You know what? I don't even care anymore. They even let their dogs shit on our patio up there
No fucking way.
and left it. So when our property manager went up there to just do his walk arounds, I don't even know how long it had been up there. Yeah. It's like, come on, man. Like that's the most petty stuff I've ever seen in my life. And then even after that, they wouldn't leave. We had to go through this eviction process. They made us go through the courts.
Sounds like you got a shit tenant.
I just they just they just got exposed for just not being stand-up people. Like it's okay to fail in business. Shit, I've been failing left and right for 10 years. Like it's all I do is fail. But it doesn't mean you have to not like be, you know, courteous and say, okay, I screwed up. I'll get out of here if that helps, or what can we do to help? It just didn't work out. But just to be petty and just drag it out over and over.
Not take the ownership for their own failure. You know what I mean? That's pretty fucked up.
That's the part that pissed me off because they always seem like they were very nice. I don't really know. Excuse me, I don't really know. They seem like they're very nice people. My cousin and her architect knew them the best. And when I saw that go down, I was like, it's because we knew we had a lien on the building for 18 months. The bank at any point could have called our loan that we have at a very good interest rate right now, and we would have had to refinance and been fucked. But we were like, come on, come on, come on, come on. You gotta bond us out. We cannot be part of this. This isn't has nothing to do with us, and they never did because they didn't have the money.
That sounds like
They were still selling. They knew they were going out of business, and they were still selling gift certificates.
no. Sounds like a residential tenant.
Yeah, it's just, I don't know. I compare that with my other building, one of the other buildings I have that has a restaurant in it, and she found a purchaser for for her company. They did all the negotiations themselves. They're going through the lease. The other guys, they're assigning their lease to this guy to run it, and I was informed about everything the whole step of the way. So like you can compare and contrast the two. It's just like night and day.
100%. 100%. That's absolute dog shit. I'm sorry you went through that, brother. I mean,
It is, dude, you get involved in real estate, and you're dealing with humans, and so you never know what kind of human you're going to run into.
it definitely gets hairy. Shit, I'm in.
You always you go into the world trusting people, and then you're like, you run into a few people. Real estate's a big one too, where like like just simple shit like walking into an apartment that somebody's left
Yeah.
after their lease is run out. You're like, how in the hell did you live like that? How do you as a human being live like this? This is absolutely amazing to me. I mean, I'm not the like look at me. I'm a bum. I might look like a bum. I'm not the clean. I'm clean, but I'm not like the guy that's going to be like. I'm not looking like Percival, whatever the mayor of Cincinnati is, where my hair is going to always be perfect and my suit's going to be perfect, and I'm going to get a manicure and pedicure. I'm not going to look like that. But I also cannot have like dirty dishes just sitting around everywhere and
Man.
trash. And it's just like I don't know. I walked into one apartment and I was just astounded.
Oh, dude, I walked into a house that I bought just at sight unseen, right? We bought it at such a good price, we just didn't even look at it.
Hmm.
Finally went to evict the tenant. There was a fucking 400-pound pig in there, and the kitchen had like 6 inches of shit just caked on top of each other. That makes it 10 times worse than the shit that your tenant left on the rooftop.
Oh yeah, absolutely. Ours were golden doodle shits, not a 400-pound pig.
Oh, dude, it was awful. But so last question I have for you,
Yeah.
basically from all the shit that you've went through, investment wise and all this crypto stuff, right? I guess biggest lesson learned, and how do you what lesson, or I guess what tip could you give for anybody looking to invest in like tech?
Well, I wouldn't give any tips in investing in tech because I'm a terrible advisor in that. I would say just by anything Web3 and deep in, it seems to be like the way things are going. I think the more decentralized things are starting to gain more traction. Real estate, it depends. Like somebody like me who is lucky to have a high earning job, probably would have been better off slow playing it and being a passive investor first in something like a private REIT or a syndication with a good operator instead of taking it all on myself. Probably would have made a lot more money. Actually, I know it would have made a lot more money. But if you're not in that position and you got to jump in with both feet, um, make sure you have a good network. Fuck, you know that. Make sure you have the best network you can possibly have. Your guys' groups, like, you guys do great work together. And then you always have like 25 guys here and there that can bounce deals off of each other at any point. And you can know that they're people you can trust. So something like that, where it's a good group of guys that you can get it, get information from. I mean, you may not have the money to actually invest, but you can be the guy to find the deals. You can drive around for dollars. You can do boots on the ground. You can do work. You can help be with the property management group. You can do a lot of different stuff to get involved. It's going to take a little bit longer. Nobody cares in 5 years when when you've got equity in different projects.
Right,
That's
right,
my only
right.
advice.
Be resourceful, right?
Yeah, because I can't tell you like. You get Fairless on here, and he'll break down everything. It's like, you got to do this, this, and this. I wrote a 500-page book about this. I'm like, I can't do that. Not credibly. They're gonna like, all right, well, show me your returns. I'm like, what? These is just. I feel like a college professor when it comes to real estate. Like I'm involved. I'm on the outskirts. I own buildings.
Well, shit, brother. Go enjoy. I fucking love you. Appreciate you coming
Love you too,
on.
man. All right.
Can't wait to see
Thanks
you
for
next
having
time,
me.
buddy.
Yeah, bud.
Yep.
I'll see you.
See you, brother. And that's a wrap. If you've made it this far, that means you've listened to the entire episode, so thank you. I hope you enjoyed it, and if you did, please leave a review on Spotify, Apple Podcasts, or wherever you're listening from. And if you've learned something or found it useful, share it with one of your homies. And if you want to get in touch with me, I'm pretty active on IG. My handle is pro_TANH. Reach out, let me know what you liked, what you didn't like, or what you want to hear about in the future. I'm here to tailor this to you. Until next time.